Hello everyone, I hope you're having a great day. You guys are being safe out there. Please wash your hands like crazy. Try to not get the virus because it could definitely hurt you and the other ones that you love, and you might not even know that you're carrying it. And if you're in a state that does reopen, you might infect somebody else, so just be extra diligent. I know for us, this is day 38 at home, and I'm happy to stay at home. I don't want to infect my kids. I want to be here for my kids. But let's go ahead and get into the market. So are we in a bear market, a bull market? Is it going sideways? What is the deal, right? Well, bull markets have been just trucking up all the time, right? Because we always have people that are working, right? And they have money coming in. Now, a portion of the funds of their money that's coming in is going to that 401k, the IRA. And so what happens is then that money goes into the market, right? So it gets taken out of their paycheck and it goes to the fund manager, potentially say they're with Fidelity or with Vanguard. It just gets taken out of their paycheck and then it just gets thrown into a mutual fund or an ETF. So that means that there's constant buying going into the market. Well, now with unemployment going up, there's not as much money constantly pouring in. And everybody's sentiment now is, hey, this market's going to turn into a bear market. Well, on Investopedia, you can see a bear market is going to be a downturn in the market or a drawdown of 20% for 2 months or more. So at this point, we've positioned ourselves with a correction. It hasn't been a full bear market because for 2 months we have not been less than 20% off of the top. So that doesn't mean that it won't be the beginning of a bear market or even a depression going forward. But I want to go ahead and talk to you, why did we have this crazy run up in the market since March, right? So let's go ahead and pull it up, what I follow, which is the short volumes, right? So you guys know, if you don't know what short volume is or short interest is, I will put a link up, pop it up right here for you guys to go ahead and check out my other video explaining it. So just a real quick synopsis, the short volume is basically you have 100% of volume from the day before, and if 50% of it was short, then means 50% of it was long. If 60% of it was short, then 40% of it was long. So when we are looking at the past week, so this is February 14th to the 21st, the 24th to the 28th, you can see that slowly but surely we have been adding, we meaning the general retail public, has been adding to the short positions. It got so high as last week being 66% short volume for the past 5 trading days, or that was 4 trading days. Because of Good Friday. And so it was 66% short, 51% short on Qs, 69% short on Russell, 64% short on the Dow Jones. These are the ETFs, if you don't know what they are. Apple, Tesla, Amazon, gold, GDX. Boeing was not over 50%. TVIX, which is going to be double the fear indicator of the VIX, and VXX. So those started to drop, somewhat implying that the overall market is feeling that there's no more fear, right? It was going in a scenario where on the week of March 30th, that people felt like it was going to drop, and so fear was going away, right? So 52, that means the fear is going away when we start to see it go above 50 over here. So then slowly it's dropping back down. People are buying it again. Maybe they think that we are going to go ahead and roll over in the market, right? Well, when you have a lot of short volume that's going to be building up and building up and building up, that creates the perfect scenario for a short squeeze. So let's go ahead and look at the indexes, right? I'm sorry, there's a lot of lines because of the alerts that I have on here, and I also have some trend lines and stuff like that. So when we look back, March 23rd, right? That was right down here. Let's go and look at our chart here. So March 23rd, 60%. We're getting up there, right? So that means 40% of the people are buying, but most of the retail public is shorting the market for 1, 2, 3 weeks. People are getting stubborn, right, with what's going on with the market. So if we have that happen, well, and that maybe there's some big money that's coming in and buying, well then what's it going to do? It's going to squeeze all of those shorts. An area of consolidation here, squeezing on up. And then we had a couple doji candles right here. And now we've hit the 50 simple moving average and we're pulling back, right? That's our 50 simple moving average on the daily. When we look at QQQ, same thing. Hey, massive volume coming in at the bottom, yet people were still shorting the market, right? They were still shorting. And so until the market says, hey, it's time to short, look at what's happened. We're in an upward channel right now. We're following the moving averages up. You know, maybe if we start to see a breakdown below the 50 simple moving average, we did have that test today on the SPY. If you guys don't already know, I do work in the training pit with Stephanie Kammerman, where we teach you guys all about the dark pool. We've seen some crazy dark pool activity happening lately, meaning there's going to be a big move. Is that going to be a crazy melt up in the SPY? You know, we somewhat have a head and shoulders upside down right here, right? If we come back, we might come back and test this 200 simple moving average here and then have it curl up. But when we look back at what happened with Tesla, right? This is a perfect example of people getting overly stubborn, right? It came all the way back down. It was down at 200. Then even more volume came in. There was a hedge fund that went out of business. Why? They said, oh no, this has to be going to zero. This has to be going to zero. Well, what happened? It hit 1,000 from 200. So even though you might look at the fundamentals of a company and say, hey, this should be going to zero. Another example, AMC. News came out, AMC is likely to be closing its doors because it's so much in debt. And what happened? 2 days after the article breaks, it doubles, right? It's down here at $2, went up to $3.85 today, almost up 100% from that point in time. The market is irrational and illogical. The best thing to do is to trade the charts. Even better, come over to the training pit and learn how to trade around the dark pool. You are going to see that when you start to follow the dark pool and really trade technically, that your trading is going to be much better. The computers and the algorithms that run the market nowadays, they don't think with emotion. They are looking at the technicals. They are looking at what is going on, right? They're looking, hey, did we hit the 50 simple moving average? Maybe one is set up to sell at the 50 simple moving average. When was the last time we were back here? All the way back up here, right? So again, this might be the next wave down. The stochastics are looking like the faster one has just crossed down below the slow moving one. Maybe it's going to go ahead and curl over here. I don't know, but right now, if you were to get in here, you could continue to get squeezed, right? If you were to wait, hey, maybe we go ahead and we break down here. This looks like a good support level that we'd had in the past. We had this area of consolidation, distribution in the past. Maybe they're loading up at that same area again. Whatever it is, try to trade the chart technically, not the fundamentals of the stock, because what has happened with, let's see, the price increase from here. I love this. This is TradingView if you guys don't know. The market went up 30%. With everything that's going on in the world, everybody's out of jobs, everything is halted. Is a 30% bounce, is that rational? Probably not, right? Let's look at the monthly chart as well. When we look at the monthly chart, we have 2 down candles and then 1 up. So from the top, right now, we're down 16% since the top. So we're out of what would be considered bear market, right? The first month we didn't hit bear market territory. Second one, yes, but then we bounced right back up, right? We didn't stay below that 20%. So for that level to look at, really, we need to be below, it doesn't want, roughly that area right there, 272.22 is right about 20% down. So if we're below 272.22 or 272 for 2 months, yes, we are in a bear market. And that's it, you know. Be nimble in trading. Go ahead and trade the charts, right? Even better, come to the trading pit and learn how to trade around the dark pool. Have a great week ahead. Carpe Profit sees those profits one trade at a time. And if you have any questions, please feel free to go ahead and email me, jane@cjanetrade.com.